Ladies and gentlemen, welcome to the study. Going to be talking about a reverse stock split. This is a question I get quite often about, and I'm going to break it down really quick for you in this nice short video. But before I proceed any further in this video, I would like to advise that none of this is a recommendation to buy or sell any securities. Always got to get that out there. Sorry, guys. But anyways, on to the good stuff, and make sure to like the video before we get started. Just hit that like button. That helps me out a ton. I really appreciate that. So the reverse stock split. What makes it a lot easier to understand a reverse stock split is knowing how a stock split works. And usually what happens with the stock split is that the value of these shares is the term that is used quite often, but that could be a little bit misleading. So instead of the value, I like to think of the stock price, because essentially that is what we're talking about, the stock price. And when we look at the stock price of, let's say, $1,000 stock, and you want to make it more accessible by having, instead of an investor pay $1,000 for one share, you could do a 10-for-1 split, and that would split that $1,000 stock into 10 stocks worth $800 each. So that would be the split moving forward from that. Now take that backwards, right? That same example we could use and do a reverse stock split where you have those same 10 shares that are at $100 each, right? And you do the reverse split, and it's going to be 10-for-1. Again, it would be then taking your 10 shares, converting it into one share, into a single share that is worth $8,000. So if you understand the stock split, you're pretty much doing the backwards of that through the reverse stock split. It's very simple. I don't like to use the word value. It can be very misleading, because technically speaking, when you look at the math and the valuations of a reverse stock split or a stock split, it is going to equal the same market cap. The only thing that really changes here is the number of shares available. So a couple things to keep in mind here. When you are issuing a stock split, specifically a reverse stock split in this case, you are not losing money. You are not losing your shares. Nothing like that is happening. It could be kind of alarming if you have no idea what is going on with your brokerage account and you notice that the number of shares have changed. It is the same value. What happens is that the stock price is changing specifically, not the value. The stock price is changing because the company would want to change the stock price to a higher stock price versus having it at a lower stock price. So you see this a lot in like penny stock land, where biotechs, specifically, since I trade those a lot, you see that where the company will say, hey, I don't want these 20-cent shares. We could take your 1,000 20-cent shares, and they'll convert it to 100 shares at $2 instead. So it gives you a higher stock price. That's what's changing. Because if you do the math on the conversion, whether it's a 1-for-10, you can run through some examples of that, and you're always going to end up with the same number. Because remember, the market cap, you take the number of shares available, right? And you're going to times that by the stock price, and it's going to give you the market cap. And if you do that pre-split, post-split, you're going to get the same answer both times. So on that note, let's do a quick recap here. The stock price is what's going to change. The number of shares is what's going to change. So in a reverse stock split, right, you went from more shares to less shares. What just happened there? The quantity of shares changed, but the value is still the same. The quantity of shares that are available, since it's less, right? You went from having maybe those 100 shares to 10 from the reverse stock split. guess what? Since the number of shares is less, you may see more movement in the stock price. If you have a company that keeps on issuing shares and throwing these splits in and splitting, in this case, not a reverse split, a stock split, guess what happens? The stock price gets lower and it's going to create less movement in the stock price due to more shares being available. This is a simple supply and demand. On that note, if you enjoyed the video, please make sure to like it, subscribe. I will keep on updating you guys with some more tips and tricks here at the Trade Study, and I will see you in the next one.